will start shortly.
Well, order, and welcome to this afternoon's Treasury Committee session on insurance. And we've structured it with 3 sessions. So we're starting with consumer groups to give their views on what's going on in the insurance industry. Then we've got industry themselves coming in for the second session in about half an hour's time. And then we have got the regulator, the FCA, from the insurance side of the regulator to talk to us in the third panel session this afternoon. An added complicating factor is that during the course of these triple sessions, we are going to have to interrupt proceedings for 4 votes on the Rwanda bill. And I will suspend the committee, but I'm hoping that by the time we get to that, we will have had time to hear from our first panel, and I would like our first panel to introduce themselves, please, starting with yourself, Rocio.
Thank you. I'm Rocio Concha, I'm the Director of Policy and Advocacy and Chief Economist at Wedge.
Hi, and I'm David Mendes Costa, Principal Policy Manager at Citizens Advice.
Thank you very much. So you're both consumer representatives here this afternoon, and we're going to try and talk to you for about half an hour. And are we right as a committee to be concerned about what's going on with insurance premiums across the board?
Absolutely, and we welcome your interest not only on the premiums but also broadly on insurance. So we are seeing a big increase in prices in insurance. You are going to have the industry later, and they can explain what is driving the price increase. I will expect that they will say that there are increases in repairs, so their costs have increased. It's impossible for us to see what is driving the price increases because that information is with the regulator and with the companies. But what we can tell you is, because we are worried about these price increases, we are looking at certain products and whether the prices of that products can be justified. And you probably have seen today that we publish research that we have done that look at the interest rate that some of these insurance companies are charging consumers that pay monthly for their insurance.
Yeah, I think we'll get onto that issue, but we're right in thinking that insurance seems to be a particular issue. We have ONS data that shows that across all insurance premia, they're up 17% this year. Is that what you're seeing at Citizens Advice as well?
Yeah, I mean, across the board, the clearest trend that we're seeing at Citizens Advice generally is more and more people who are unable to afford the essentials and are being priced out of essential markets, and insurance is no different to that. So we regularly talk to our advisors, as you'd expect, to understand what they're seeing. In 2022, we surveyed our advisors to ask them how far they're seeing clients who have had to cancel car insurance because of either rising bills or because it's unaffordable for them. It was 5% of advisors had seen that in 2002. Last year, it was over half. So we're seeing a clear rise in the number of people who are coming us for help who are unable to afford their insurance. And to be clear, insurance really is an essential, especially when it comes to car insurance at least. People need it to drive, and people need to be able to drive in order to look for work, in order to get to work, in order to make hospital appointments or run their kids to school. And the people who are kind of coming to us for help often are having to make genuine, impossible choices between whether to pay for their car insurance, which in some cases they're finding is unaffordable, put food on the table. We've had people come to us having to make food bank referrals because of the rising cost of insurance, or unable to make job applications.
So we're right to think it's an issue.
Absolutely.
The second question really is around what's already been done by regulators to try and address what we thought a year ago when we last had the industry in was already a pretty sharp rise in premia. One of the things that had happened was that this loyalty penalty that I think everyone's come across, you get your renewal and it looks like a big hike and you shop around and you get something better by shopping around. There were steps taken to try and sort of end those kinds of loyalty penalties. Companies were told they couldn't charge new customers less than they were charging existing customers. Has that just had the effect of sending all premia higher?
We don't think that is the case, but we think that intervention was the right intervention. It's not the only intervention that we want to see to deal with this issue, and I welcome the opportunity to discuss that with you. You will expect an intervention of this, that there is some rebalancing on the pricing of the different products and different customers, but I don't think that you can, or there is no real evidence that shows that that intervention is what is driving these big increases in prices that we are seeing.
So what do you think is driving the increases then? So it's a very competitive market, people can shop around. What is driving the increases?
Well, I think that is a question for the industry, because we don't have access to that data, and it's a question for the regulator. But what we are seeing is in some products, prices that are difficult to justify. Doesn't matter the fact that they are facing some increases in costs. And that is what I was trying to say before about this. For example, when you pay monthly, which is related to affordability, because the people that pay monthly for the motor insurance or the home insurance are people that actually are in the low income. And what we are seeing is that some insurance companies, they are not all, but a large part of the industry are charging interest rates that are quite high. So, for example, up to 39%, some companies for car insurance. Now, you say 39, sorry?
Which ones?
Well, we put it in the press release that we put today, and we can you will see all the companies have been named. But can I?
What press release are you talking about? We'll get you a copy.
You have it, and I have it here. I can list them. But can I finish the point 1 second? Is that looking at that number in isolation, it doesn't give you a lot of insight. But it's when you compare it, for example, for a credit card, in the same basis.
But forgive me for, I think you've done some very important work, and we thank you for your important work about the fact that there is a penalty for paying in instalments from lots of providers. But just the premium itself has also gone up. So that was the bit I was trying to focus on. But you're saying you don't have enough sight of that just to do more than observe that they have gone up.
Can I just make another point? Sorry, it's also whether this is a fair value. So you not only need to look at the price, but also you need to look at the number of complaints, and we are seeing an increase on complaints that even though you are paying a higher price, you also are not getting the right service. We were seeing that when you have the problem, you don't get in that.
We'll definitely be asking about that as well. But just on this question of the loyalty penalty and premium rises, any other observations that you want to make?
I think all I do is agree that it's incredibly difficult, both from the consumer's perspective and us as consumer groups, just to be able to disentangle what is driving higher prices, be that higher premiums and the rise in premiums, or the different prices that are faced by different groups of people. So we know that people on lower incomes tend to be charged more for their insurance, setting aside this question of like annual versus monthly. And also what we see in our own data is that people of colour are charged on average £250 more for their car insurance than white people. And at the moment, this is what we think is, none of this is direct discrimination. No one's collecting this data in order to do so. We think it's indirect discrimination on the way that postcodes are treated and the way that risk is attached to it. But there's no clarity on what's driving that, what risk factors are attached to postcodes or what cost factors are attached to them. And we can't, it's really not for us or for consumers to figure that out. It's for the FCA to ask insurers to collect the data and to work out what are the factors driving it. And until they do that, we can't move the conversation forward in terms of how you solve things like the poverty premium or the ethnicity penalty, or try and work out ways which could potentially more fairly apportion risk or costs. We just can't move that forward without that data.
Thank you. Angela.
Thank you very much. I mean, by definition, insurers make sweeping generalisations about postcodes or ages in order to sort of work out their risk factors. As anyone who's seen the cost of insuring a car for somebody under 25, wherever they live, and obviously a more individualised approach by taking into account previous sort of behaviour and claims and all of that might be helpful when it can be done. I'm sure there's an AI tool being developed even as we speak to be able to do that. But I mean, my constituents and many people who write to the committee feel that insurance is becoming more of a rip-off because the price is going up. It's harder to make a claim. People, when they do make a claim, are often have to wait a very long time or aren't dealt with very fairly, and that's particularly the case for insurance that's compulsory, such as driving insurance. Is that the kind of approach that you see in the Citizens Advice Bureau, that people think that? I mean, we know the prices are going up, but it's trying to get a handle on how much of this is justified and how much is unjustified.
This is it. And I think the people who come to us for support just have no idea what's going on. They are offered the price that they're offered and have no idea what's sitting behind it. And often they're not even going to be aware of the fact that on the basis of where they live and their postcode, for example, they might be being charged a lot more than someone who could even just be across the road from them or like a few streets down. That there isn't the transparency. And I think that lack of transparency is probably what drives the low levels of trust that we see in the sector. So the FCA's Financial Lives survey pretty much, I think, found insurers were bottom of the pile out of mainstream financial services in terms of levels of trust. And I think transparency is absolutely key to that. Now, consumers aren't going to figure that out by themselves. This is why it really needs the FCA to come and look into what precisely the drivers are. If insurers say, look, there's a lot of competition, you're getting fair value, we'll test that and show it. And I think unless the regulator can kind of tell a story which explains this is why prices are going up, or actually they shouldn't have gone up so much, or this is why people on low incomes or people of colour are being charged more, and say whether that's fair, and if it's not fair, to act. But
so increasing transparency of pricing would be a reasonable thing to do, so that people can work out how much of the price is like hidden commissions, like we had in buildings insurance recently, that the FCA have picked up on, or indeed the sale of motor, sort of credit in the motor market, which has a huge impact on the price of the final product. There's been a lot of that going on, it seems to me.
I mean, to some extent, more transparency is always useful, but arguably what we don't want to do is put more and more information in front of consumers and just assume that means people will make better decisions, especially if that information isn't something that they're able to necessarily act on.
Can I add something on this? I mean, in a previous study that FCA did, they found that some insurance companies use up to 400 data points to calculate the premium. So, I mean, you cannot put that information in front of the consumer and pretend that they will be able to do something with this. But what we need, and there is something in the consumer duty, that a key component of that is fair value. And what we need is actually the regulator making sure that actually these companies are providing a fair value for consumers. And that is not only looking at price, but also looking at the issues that you mentioned about then when you have a problem, what kind of service you are receiving from these companies, and whether the process for claiming is a fair process.
Coming on to that, there's been a huge increase, according to the Financial Ombudsman Service, in complaints about insurance, with car and motorcycle insurance featuring, hire purchase for buying cars featuring, and buildings insurance in there as well. What insight can you give us on what's driving those increases in complaints?
So you mentioned before that AI tool may be developed. Well, actually, we are using an AI tool to look at all the decisions that the Financial Ombudsman have published. In particular markets, we are looking at home, motor, travel, and pet, because they are the usual kind of product consumers use. And we were able to look at 8,000 decisions that the Financial Ombudsman have published, where they upheld the case of the consumers. And we found that the number of times that the insurance companies have caused additional distress to the claimers have increased since 2019. So we are seeing that process, this is evidence that the process is getting worse rather than getting better despite the increase in prices.
Yeah. And I think that, I mean, my own constituents, when they have cause to claim on their insurance, often come to me because of the slow and unacceptable nature of the response, even when it's a fairly open and shut case, which ought to be dealt with fairly quickly. Are you seeing that in the Citizens Advice Bureau, David?
I'd say the main thing that we're seeing isn't so much problems that come to do with people having to claim, but people who just aren't able to get the insurance in the first place. And when insurance is when it's essential, for instance, to drive a car and you have to have it, it's people who are coming to us saying, I don't know what to do and I don't know how to choose between my grocery budget and the cost of insurance because I need to get to work, I need to make my hospital appointments, I got to get the kids to school. There's no other way to do that. I can't lose my job. So what do I do? And that's the situation that people are coming to us with. And I think that's why it is essential for us to be, and for the FCA to be looking into, as Rocio said, are we seeing fair value in this market? But in particular, how are prices being distributed to different people? You talked about broad brush assumptions or generalizations being made, but there will be winners and losers of every assumption that is made. And the worry is that the losers, time and time again, are the people on low incomes and people of colour. And potentially this is why we're seeing much higher prices for these groups. And I think that's what really needs looking into, not just do we have lots of competition in the market.
Actually, the postcode lottery involved.
That's how I
mean, so that there would be more likely to be people of colour living in particular postcodes. And so you get the sort of the ethnic increase in prices for ethnic minority people who just because they happen to be living in a particular place. It's not about whether they're a good driver or not. It's where they park the car.
Well, I think it's the question. So it's not I think it's exactly that, and it's not about them as individuals. It's based largely on their postcode. But what we don't understand is, and then what is it about those postcodes that are driving the higher premiums? Is it higher risk? In which case, what are the risks? Is it higher cost to serve? In which case, what are the particular costs? Right. And that's, whenever we ask the question, what I hear from industry or from trade bodies tends to be, it's either this is very difficult, and they just leave it at that, or it can be a hunch, which is usually based on quite lazy stereotypes, or it's just throwing an idea out. So maybe what I heard was, it's proximity to garages and there are less garages in certain areas. But what we don't need is guesses. This is insurance, it's data rich. And these are empirical questions about risk and cost. And they're very, very smart people working at insurance companies. I actually don't believe these are very difficult questions to work out what is driving the poverty premium and what is driving the ethnicity penalty at a postcode level. I am certain insurers, if they put their brains to it, could find out what the answers are and pass that to the FCA. I appreciate they can't pass it to each other for commercial reasons. There's no reason they can't share that with the FCA. And then we can move this forward.
Consumer duty might, if it's properly applied by the FCA, might lead to some of that kind of information being made available, not publicly available, but available for oversight and overseeing by the regulators. Is that what you're saying? Is that what you're hoping that the consumer duty will... And are there any signs of that beginning to happen yet? Because it's quite early days for the consumer duty, but...
And I think, Anne-Marie, you've got some further questions on consumer duty.
Yeah. But the fair value issue is where that might be unpicked.
Yes. And can I say, the consumer duty is recent, but actually the requirement for fair value for insurance have been in place since 2022. Right. So I think that we have enough time to see that bedding in, and actually a regulator have the powers to ask for that information and make that assessment.
Marie.
Thank you. Turning then, as Dame Angela has commented, to the consumer duty and looking at whether or not it will make a difference. In theory, it moves if you like, the focus away from the company to the consumer. It effectively says the consumer has to be at the heart of the decision making, if you like, in terms of how it defines and describes its product and services, how it sells them, how it engages with those that buy insurance. And the principle effectively sets out that the insurance company has to deliver good outcomes for a customer. They have to avoid foreseeable harm and help them pursue their financial objectives. Now, those things are going to be very different for different consumers, because some are going to have a much better understanding of insurance products and of risk than others. So how do you see in reality this being applied by the insurance companies? Some of the insurance companies who have responded to us have effectively said the areas they think they can deal with is trying to, if you like, consumer-proof, if I can put it like that, the products and services they offer, although I suspect that is something we will be looking at much more closely going forward, and likewise with price and value. It's the bit about consumer understanding and consumer support which I think they are grappling with, trying to interpret. So from your perspective, are you seeing a change in the approach of insurance companies in the way they explain their products and services, in the way they support their consumers? I can see a shake of a head from Ms. Concha. So my question is, are you seeing a change, to which the answer may be a straight no? If the answer is a no, what is it that you would like to see being done differently by the insurance companies to actually deliver on those four things they're supposed to be delivering on, particularly the difficult ones, which is consumer understanding and consumer support? Ms. Concha, can I start with you?
Well, on that, I think that is much easier on the fair value, as you were saying, but and that support. The reason because I'm negative about seeing a change is because we are seeing the number of complaints increasing. So that process, when you engage with these companies, when you need to make a claim, we are seeing an increased number of people that are dissatisfied on how that process have gone. So that tells me that actually they are not complying with the consumer duty, and the consumer duty is not having enough an effect on this. But what I will say is, it's not that you can have a brilliant regulation, and we think that the consumer duty, focus on outcomes and focus on the areas, is a good regulation. But having a good regulation but it's not properly enforced is a problem, because it has to be properly enforced. So we would like to see more of the SCA looking at these issues that you are mentioning, saying why these complaints are increasing, how the experience is for claimants when they have to put a claim, what companies are not going through, are not providing a good process, a good customer service. So what we need to see is also enforcement.
Mr. Costa.
Thank you. One of the really interesting things with the consumer duty, as you say, is this focus on outcomes. And the consumer duty is very clear that outcomes are going to vary depending on different groups, and different groups will have different needs.
Yes.
And in particular, it's very clear around people in vulnerable circumstances and people with protected characteristics, and the steps that firms need to take to ensure that they achieve the same outcomes or just as good outcomes as any other customer. And I think this is where we feel that, or at least I feel that it's not really clear that industry has fully taken that on board, because we haven't seen the kind of movement or a step change in conversation around the points that I've been highlighting, for instance, around the ethnicity penalty. You know, the fact that we see that people of colour are paying £250 more for their car insurance than white people on average. Now, viewed through the lens of the consumer duty, that's a protected characteristic group who is facing a different outcome on pricing to another group, and the consumer duty says, well, firms should be monitoring that. It's not clear that they are. Where they see outcomes like that, they should be able to explain what's going on and be able to show why there is that difference in outcomes, well, we're not seeing the monitoring, as far as I can see. We're not seeing any explanation to say that that difference is on an objective basis, and we're certainly not seeing steps to try and mitigate it or avoid that difference or bring the outcomes to a more level playing field. So I think the consumer duty is absolutely the right tool for the job, but as a tool, it doesn't seem to be delivering the outcomes that it's meant to be that because of the industry not fully getting on board with how to do that or doing it, be it with the regulator not putting enough pressure on them to do it. More likely a combination of the two.
Consumer duty, there has been, once it's been introduced, there has been, if you like, a lag time which the regulator has allowed. So at one level one could say, well, maybe you're seeing what you're seeing because the insurance industry is having to work up its system as to how to implement all of this. So now is a good time for you to give your input as to what it is you would like the insurance companies to do differently, both in terms of the data they collect to ensure that this duty is being complied with, but also the sorts of things you'd like to see them do differently with regard particularly to helping consumer understanding and with regard to consumer support. So I don't know whether, Ms. Concha, you've got any thoughts about what you'd like to see the insurers build up as a process to make sure they actually do comply with this consumer duty?
Well, I mean, the first thing that I will say is that insurance is a priority for us. So absolutely agree with you that we need to, this is an area where we need to produce analysis and engage with the companies and engage with the regulator on this. What is the exact process? We cannot design that process. That is for the regulators with the company. What I can do and what we can do is to show when the process is not working well. And we constantly publish research on this. We are going to publish new research in May that also look at the claim process, for example, and we are seeing that people in vulnerable circumstances, whether the claim was accepted or not, are having a worse experience than other consumers. So obviously we will share that evidence and we will have that conversation on the companies why that is happening. The same issue with the research that we have been doing looking at the Financial Ombudsman Service decision. We are going to highlight which are these companies that are showing consistently letting down consumers and hold these companies to account and put it there and say why consumers are having that experience.
Mr. Mendes Costa, in a way, you're in a slightly different position in that you are at the rock face with the individual consumer who's having a problem. What advice would you give to the regulator, the FCA, in terms of what it is you think they should be doing? And I don't mean sort out enforcement and collect data. I'm trying to look at something more granular because you are seeing what's actually happening. You are seeing how consumers are suffering, if I can put it like that. You can see which bit of the insurance process isn't working and where therefore the regulator needs to absolutely laser-like focus. So what advice would you give the regulator about what practical things they should do to make sure this duty works?
I said for us, the critical concern is affordability and people who just aren't able to access these products. In terms of the regulator, what's needed is to extract from insurers a clear understanding of what risk factors and cost factors are driving different pricing for people on lower incomes, who are predominantly the people who are coming to us for help. And then from that, once it's clear, what are the risk factors, what are the cost factors? And this question, as Rocio said, is there fair value? Let's just assume for a second there is fair value. What are the issues that are driving different prices, which are meaning that people on low incomes are being locked out of key markets like insurance? And then to be able to take that information to either say what needs to change in the market to make insurance more affordable for people on low incomes, or what steps need to be taken. I mean, what we hear a lot from the insurance sector is this isn't regulatory policy, this is social policy. But without the information on what's driving the issues, we can't move forward the social policy question either. So I think that's the clarity we need.
I think what we've heard in this very helpful first session, where you've sort of set the stage, you've recognised that there is an issue, that we're right to be looking at it. I've heard a message around transparency, and it's the transparency that in particular you're keen to see in terms of a solution. I wondered if you'd be kind enough, we've had far too little time to actually ask you the questions we want today, but in drawing this to a close so that we can start the next panel, if you'd be kind enough to share with me those data points that you have covered in today's session, and also just in a follow-up letter to the committee, just list what you see as being the essential solutions to move things forward for consumers. So I think that really draws this first consumer panel to a close. We're incredibly grateful to you for coming in and setting the stage, and for also doing that very valuable work in terms of the poverty penalty on the instalment payments, and ranking everyone and getting that data out there. Thank you very much.
Thank you.
Thanks very much.
I'm just briefly suspending while we bring in the second panel, please.
The proceeding is currently suspended. The proceeding is currently suspended. The proceeding is currently suspended.
%20 increase in claims year on year. So looking forward, household insurance for a number of insurers is still close to 120% core. So I expect, whereas in motor I think it'll start levelling off, I expect home insurance to continue to need additional premium as we go through 24 and beyond.
I I see. Okay, and Charlotte, I mean, you were here last year. We were worried last year about the hikes that we'd seen. They've been even worse over this year. Is this something that constituents are going to continue to suffer from?
I mean, well, in terms of what might happen over the coming year, it's difficult to predict. You know, some of the challenges within the market are still there. And as Colm says, you know, in terms of the profits within the market, they are not there. So in terms of you know, this is about kind of premiums kind of catching up with some of the costs within the market. It's worth making a broader point in terms of the longer term costs of motor insurance. Part of the reason why the increases look so significant is that it's coming off the back of the pandemic, where motor insurance in particular was reduced quite significantly because the risks of being in a car accident when you're at home are quite low. So you saw quite a sharp fall in motor insurance.
Saw drops in their car insurance premium. Does anyone in this committee remember that?
The evidence is clear that there was a 20% decrease.
You did, okay, Stephen.
Through that period.
Round.
You know, as people weren't driving, so therefore you know the risks are much lower. You know, the real price of motor insurance now is about equivalent to what it was in 2018. So it has now kept track with CPI, and some of that has kind of been met again. But you know, what will happen next year?
Sorry, did you just say there's not been a real terms increase in car insurance since before the pandemic?
So it has gone up and down, but you know, the current cost is about $670. That is the equivalent to what was the real cost in 2017, 2018.
You're
yes.
saying car insurance premia have not gone up more than inflation since before the pandemic?
Yes.
Okay. I think that's sort of different from the data we've seen, but
we can certainly share with you the premium tracker that we have. It's I'm sure we do send the press releases to you when we do it.
Now, what about this issue around the loyalty penalty? So the industry was told to stop imposing a loyalty penalty, charging existing customers more than new customers. Mm-hmm. Has that resulted in a higher level of premium across the board? And why is it that when you get a car or even other insurance policy renewal, you can call up your insurer and often negotiate down to a lower rate? Why is that?
So the changes, the general insurance pricing practice changes, were things that we had called for in terms of, I don't think there was any doubt that the publicity around the loyalty premium, did not help, I think, the reputation of insurers. But it was very difficult for single insurers to act on it. So in terms of actually rules across the whole of the industry so that everyone was the same, at the time I think we said what will happen, because these are competitive markets. If you are decreasing the cost of somebody else, it is going to be increased somewhere else. You would you would expect that to be level. So we wouldn't have expected there to be increases across the board in terms of average, but that some people would have benefited and some people would have lost out. And I think, I'm sure we'll get on to poverty premium, I think it is one of the challenges of the GIPP changes is those people who used to shop around, who perhaps were a bit more price sensitive, the deals that are available for them are just now legally not available for them. So
you still negotiate down with your existing insurer.
Yes, you can, but sometimes that's kind of saying, oh, hold on, what's my excess? Or how many miles do you think I'm actually driving? Sometimes it's changing certain parameters of the quote, rather than, and sometimes, I'm sure Colm could probably talk a bit more kind of informed in terms of sometimes it is okay, well actually we would like to keep your business and maybe we can reduce the price slightly.
Can you just spell out for the record what GIPP stands for?
General Insurance Pricing Practices.
Siobhan.
Thanks. My constituent, Mrs. R, would be desperate to be here to tell you about her experience of trying to renew her eShore car insurance, but you're going to have to put up with me instead. She's in her 70s, and her and her husband were jointly insured, and unfortunately Arthur's got dementia now, so he can't drive. When she rang up to to renew her car insurance policy this year. She was initially offered renewal at £750, which she was happy with, but they wouldn't let her pay over the phone. They said the only way she could pay was online. She doesn't have access to the internet.
Mm-hmm.
So she looked for an alternative. The cheapest alternative she could find was £1,200, and eventually her son found her insurance, where she now has to have a black box in her car to be insured. She's driven for 30 years, has not ever had a claim, and feels ashamed at this point in her life. She's now required to be restricted in this way simply because she's not on the internet.
Mm-hmm.
Is that not discrimination against older customers?
Obviously, I don't know the details of the specifics of the case, but the way that you have described it, it does feel like, I don't want to describe her as vulnerable, but she would certainly be, under the vulnerable customers definition that the FCA would have. And so I would have expected, actually, Esure to at least have considered whether or not that paying over the phone was an option.
No, she at length she phoned and she was told no, she couldn't. I mean, I don't want to delay the committee, but she got involved with trying to show her the kind of the number that you get to ensure that the payment, and she got herself in a terrible mess. She cares for her husband has dementia. This was a real big challenge for her.
It is one of the challenges, and I'm sure we'll get on to poverty premiums and ethnic penalties. It's one of the issues, isn't it, where people, either because they're high risk, this isn't the case here, but where they might be a higher cost. So the cost of somebody not being able to do business over the internet means that they place a higher cost. To what extent is it acceptable for them to bear that cost, or whether or not that cost should be more collectively based? Is a broad question.
Well,
but it's not a question an insurer can answer.
Yeah, if you have a consumer duty, if you have wider responsibilities to society as very big, respectable companies that make a large amount of money, to suddenly forget, as banks do, it's not just insurance companies. We speak frequently at this committee about bank branches closing and access to vulnerable customers. Does the insurance industry not have a responsibility to provide insurance to long-standing, loyal customers who've not been claiming frequently because by virtue of probably their age, they're not on the internet?
I mean, the short answer, I mean, if they're not on the internet, somebody will be deemed vulnerable, and there would be a phone available. There are certain covers that are only sold digitally, so you can only buy them on the internet. There is no phone service, there is no, if you like, person-to-person service, and that's related to the cost of that cover. They're typically cheaper covers. In relation to age, I mean, most companies, I can only speak for Allianz, we do differentiate between new customers we would write over a certain age and existing customers, where for existing customers we would retain that business to a much older age than we would for new customers we'd write. So we very much take into consideration the fact that the customer has been a customer of LV or Allianz for a number of years, and we would retain that business longer, despite the fact that the risk associated with age is very clear in terms of the loss ratio impact of age.
Your competitor, Esure, is not taking that position. Last year, she could pay over the phone. This year, she can't.
I mean, I can't obviously comment for Esure, but there is circumstances of vehicles change or location changes, or there's other changes that you would re-underwrite the risk. But typically for an existing customer and an existing vehicle, we would take a different view of whether we'd retain a piece of business that we may not write as new business because of restrictions we would place on ourselves in terms of concentration risk within certain age brackets.
Okay. And my second question is about an issue I think the Chair's already raised, and that's about the cost of paying monthly as opposed to up front. A lot for that is a challenge for a lot of my constituents. you know, having insurance, not having insurance is a difficult issue for people when they can't afford their regular bills. But the idea that they're paying more, approximately £309 more than their more wealthy counterparts. Some insurers, as we've heard from the panel before, are charging 35% APR. Matt Brewis, the Director of Insurance at the FCA, called it a tax on the poor. Do you think it's right that poorer households are paying more for their insurance? It doesn't really sit well with a consumer duty for price and value, does it?
So I think, firstly, it's important that there's a monthly facility. You know, I completely accept that for a lot of people paying, you know, well, what's the average? The average is now 650. Not that many people have £650 spare to be able to pay for an annual premium up front. So the importance of being able to kind of budget is you know, the availability of that, I think, is quite key. There are additional costs to paying monthly. So, you know, in terms of extra administration, you have the cost of capital, so you haven't got all the money in up front as an insurer, so you can't invest that money. So there are what I would say is legitimate costs that are right in terms of perhaps an additional cost from paying monthly to paying annually. We have been, you know, discussing as an industry whether or not, well, what is the right sort of approach, and is there greater clarity we can give about what would be appropriate. We've already, our colleague from Which already mentioned fair value. So each company would have had to have done a fair value assessment on their monthly payments and on their premium finance, as it's called within the industry. You know, it's very hard, I think, to kind of sit here and say 40% feels reasonable. You know, we have considered whether or not things like a voluntary cap for the industry is the right way forward. There are very good competition reasons why you can't do those sorts of things, which we kind of understand, having spoken to the regulator. I think we understood them before we spoke to the regulator, but it's always worth checking. You know, so it is an area where I think we are concerned. Colm chairs a group across the ABI looking at motor affordability and, you know, whether or not there is more that we can do to try and help people who want to use monthly payments. But what we've got to try and make sure we don't do is that in kind of saying, oh, actually, we can make these cheaper, we suddenly means that insurance is less available to certain people, because certain companies won't pay, you know, are not willing to take on those people as a risk because, you know, you can't make money from them.
Mr. Holmes, under the new consumer duty, the FCA expects firms to appoint a consumer duty champion at board level to assist the chair and CEO. Would you be able to name your consumer champion?
Yeah, well, Alison Rayner, I've split our risk function in our business between what I would consider prudential risk, which is, if you like, the Matt's end of it, and the Chief Compliance and Customer Officer, which is Alison Rayner. So we appointed her, and I have 2 risk executives on my group exec. So recognising that they're very different ways of looking at risk, the consumer side. And on the board level, we have a compliance and customer risk a subcommittee of the main board. That's chaired by the non-exec, and Teresa chairs that. And that focuses specifically on consumer outcomes and customer outcomes, the MIs for that we've completely rebuilt our entire MI and customer data suites to be able to provide much greater granular data around customers. Now, for LV and for Allianz, this is something that was very much at the heart of our business anyhow. So for us, we very much, with consumer duty, focus on customer support and the customer, if you like, journeys to ensure that they understood the risks. Because with JIP and fair value, we had already dealt with product and price in terms of you know how you would manage product and price in the market. So it's very central to what we do, but it always was. So consumer duty didn't really change a huge amount, but rather the testing of how our customers see our data and our communications with them was more critical. But from our perspective, we already were very close to ensuring fair value and now good customer outcomes was at the heart of everything we did.
Her title doesn't sound like she's a community duty champion. Sounds like you're finding some of your customers a risk.
No, not at all. It's about good customer outcomes. It's about ensuring that in our product design, in our implementation, in our sales process, it's across the board. It's soup to nuts that we look at the customer journey and ensure that everything within that delivers a good customer outcome. So the suite of MI, as well as looking at this on a daily basis, which we do, and we very closely track all matters associated with customer outcomes. We track that right through. And if you look at our Trustpilot scores, it's 4.4 for LV and 4.5 for our Allianz brands out of 5. It's something we track on a weekly basis. I have my own EXCO subcommittee that specifically looks at customer and customer risk and customer outcomes. And that's the sole purpose of that meeting.
I'm going to just move things on because we've only got you for an hour and we've also got the risk that we may be interrupted by votes before then, and it would be great to have finished this session. So, Dr. Coffey.
Thank you. Have there been any unintended consequences from the introduction of consumer duty?
It's probably too early to say.
Yeah, none that we can see. I think there might be certain elements of that might change. I think we'll find out in time. I think GIP had a much bigger impact on how insurance is sold and how insurance is priced and managed than consumer duty did.
So, recognising the consumer duty was initially for new customers and will next apply to legacy products, do you anticipate any impact on the insurance market from that?
Do you mean in terms of the changes that are likely to come in? I mean, the legacy products that come in this year and the anniversary of the consumer duty are largely in the long-term savings area. So they will be legacy pensions products. Obviously, that's some of those are incredibly old. Going through them, that's the reason why it was done the year after. I don't expect there to be massive changes. I think some companies have already said that they've put some money aside in terms of what the changes they may need to do and how they may need to support customers. So I think Phoenix has said that they have put aside 75 million, which is a large amount of money, but it's not a large amount of money in the grand scheme of the scale of Phoenix.
So, Mr. Holmes, thank you for coming today. Your own website says that you carried out a gap analysis of where you were not meeting the requirements of consumer duty, particularly regarding customer understanding, customer support. What were your own identified shortcomings and what are you going to do about it?
Yeah, we looked at 3,000 separate customer journeys and made 200 changes across that. So it was around understanding of insurance, plainer English, greater explanation with regards to what was actually why premiums move, for example. We completely retrained all our staff in terms to understand that. We've now written with the premium increases, it really is important to us that our customers understand why premiums are increasing. So we've been very clear with our customers what is driving the cost of the increases in insurance and the constituent parts of that, so they fully understand it. It's an incredibly competitive market, and we want to retain all our business, or the vast majority of our business we want to retain. So we've actually done a huge amount of work in looking and testing each of those customer conversations, each of those customer journeys to ensure that the customer feeds back to us how they interpret that and what more they need from us.
So, coming back to Mrs. Clark, your own roadmap to tackle insurance costs states in step 1, the industry should do more on transparency around which vehicles are more costly to insure. Now, we are aware, or it's well known, about significant increase in theft, particularly in very high premium vehicles already. Does that mean the people, how can I put it, not quite with the old bangers, but they're reliable cars, are they paying the price for a bunch of Chelsea tractors?
No, because it's risk-based pricing, it would be highly unlikely that they were somehow being pooled with your Chelsea tractor. That's the why people who have Range Rovers and other cars where there seems to be a specific problem are facing very large increases for their insurance because of issues around theft and indeed, in terms of cost of repairs of some of those cars as well.
I guess it's just because we here, and Dame Siobhan mentioned her constituent. For the record, I used to be with the AA. They wanted to put my premium up by 50%. I didn't even bother haggling. I just went to somebody else and it was a 1% uplift. And it just feels to me that at the moment, in terms of transparency, that isn't necessarily coming through. And it feels that it takes a lot of effort. And should we not be in a situation where insurers are just giving their best price to that, as opposed to somebody having to get on the phone, haggle around, threaten to leave? That's what the loyalty penalty is supposed to try, or the removal of it was supposed to try and get away from. But it still feels it's there. So how are your members going to get to it so that we don't have to spend lots of time using a variety of whatever insurance brokers and similar? Because these are big differences when actually I appreciate risk may be done separately, but they're big gaps in what people are trying to do and scrambling around so they can actually still use their car to get to work.
I mean, I have a lot of sympathy in terms of what you're saying. In terms, I think it's very difficult for people who are outside, looking at it, trying to understand why an insurance company may have a very different price than another insurance company. Partly because they probably think that they have certain innate risks, and those are the things that are being priced. But it could be other things in terms of the insurance company feeling that actually they have enough cars insured in a particular area. So if you're the next person to kind of come into that area, they're kind of thinking, well, no, hold on, I need to balance this, or I have too many older drivers, so I'm looking to try and get younger drivers as a way of kind of managing the risks across the company. And I think that's just very difficult when you're a customer.
So that could actually mean if you're an older person who happens to be trying to renew 101, all of a sudden your premium can go skyrocketing because they've already got 100 people on their books. Is that fair of how it works?
It wouldn't be quite that. In personal line insurance, in commercial it's much more sophisticated around appetite management and exposure management. In personal lines you do look at the exposure against peril, the exposure against location, and you would look at certain vehicles. So for example, it's been reported LV, we decided to stop insuring, for example, Honda Jazz cars, and I know it got a lot of publicity because of the theft of catalytic converters. Now, we could keep insuring those because of the difficulty of pricing it, that would have had a knock-on effect on every customer's insurance. So to be fair to our existing customers, it was easier just to stop for us insuring them. Now, you can still insure a Honda Jazz in the UK, but not with LV. So certain insurers would tend to specialise. So certain insurers are very good with young drivers. Some are better with the 30 to 50-year-olds. We do Age UK, which would be very good with older age brackets. Some are better with sophisticated cars and use different methods of pricing it. So whilst the market we're all insurers, people do tend to find niches where they are particularly strong, but everybody's trying to expand, and that's where you can get big variations.
Thank you. If I go back again to Mrs. Clark, step 5 of your roadmap talks about tackling insurance costs, calls for the option of graduated driving licences and similar. So, full phase approach. Do you think this is really possible? I'm in a rural constituency. There was definitely a challenge of young people being able to get to work because they couldn't get their driving test and so on. We're past that now. But the idea that somehow it feels that young people who don't have like the London bus network or whatever,
I don't think
they can't get to work without.
Yes, I don't think it's about saying that they can't start driving at 17. I think it's kind of saying in other countries where there might be restrictions on, say, motorway driving until you are 21, there might be restrictions on the number of passengers the same age you may have within the car. We know that there is a particular problem about the cost of insurance for young drivers. It is very, very high. But that is reflecting the risk of young drivers. And so what can you do about that? Trying to support them to become better drivers and through these kind of graduated kind of schemes where you have restrictions on, you know, how fast the car can go, other things after people have passed their test, as a way of kind of developing good habits.
I mean, preventing late night driving is one of your policy suggestions, and I strongly feel that shows that you're not in tune with actually a lot of young people trying to work in our countryside and coast.
Well, I mean, these are ideas. We are looking at where the risks are and whether or not there's anything we can do to reduce those risks. You know, clearly, you know, if you're a young person and you're working shifts, then, you know, that is a bit of a challenge. But, you know, these are just ideas.
Okay, my last question, because I know that people want to come in, is just to clarify from what you said earlier. Can I take it to be that you do not believe that the consumer duty is pushing up consumer premiums? I asked you if it had any impact on the insurance market, and you said no.
You said unintended.
Unintended, okay.
I don't think
the consumer duty was ever intended to push up premiums.
No, I don't think that was its design. You know, there are costs to regulation. There clearly are. You know, I think within the insurance sector, because we had the general insurance changes a few years prior to consumer duty, you know, we're probably a bit more used to them. Do I think it's pushed up prices? I mean, it's so difficult to tell in terms of the other things that are going on are so significant. You know, inflation through this year, you know, the issues with the supply chain, the cost of cars. I can't imagine consumer duty is significant compared to those.
I mean, for us, it's very, very minimal. It's not relevant in terms of the cost of insurance.
Thank you. Thank you very much. And just we've done some calculations ourselves. CPI is up 28% since 2016, and car insurance premiums are up 78%. So we'd be very interested in your calculation as to how they haven't gone up more than inflation. Stephen.
Thank you. Sorry, thank you. Good afternoon, thank you for coming. Can I just, I want to ask a question about building insurance, but I want to ask a couple of questions about evidence we've heard already. At the start of your evidence, Mr. Holmes, you set out for our chair the reasons for cost increase, the number of cost increases, why they were happening, etc. So were you surprised, as I was, to hear the previous group of panellists suggesting that they didn't understand why costs were going up?
Yes, I guess is the short answer. I think the slightly longer answer is I think they understand broadly, but they wanted some more specific data around it. But yeah, I mean, categorically, for example, we don't use ethnicity. That's just a fact. We don't. So there is a lot of evidence out there around data that supports the cost of repairs, car hire, etc. is very much public data.
And you raised that, but I was going to raise that question with you because the gentleman from Citizen Advice Bureau twice raised the issue that some people of certain ethnic backgrounds were being charged on average £250 more for insurance. I'm assuming that you would say in response to that, first of all, there would be no ethnicity bias, but actually there would be other risk factors that were taken into account, possibly where they were living, for instance, amongst other things. Would you care to explain why you think, what might explain that rather than ethnicity?
Yeah, we don't collect ethnicity data from ourselves or from any of our data providers. We just don't. With regards to why postcode is important, what you're looking at is population density. You're looking at vulnerable road users. You're looking at the nature of the streets, the number of accidents that take place within that postcode. So that, or the probability of criminality within that area, these all factor into, and distance from resources, which he did, to be fair, mention. These are all factors that would come into our algorithms. And I don't know if he said 400. I don't know how many we have in each algorithm. But these are some of the key factors that you would look at, as well as obviously the vehicle, the age of the driver, etc. These are key factors, but postcode is a key determinant of risk because we know within certain postcodes that happens. So if you're living in a city, there's much more vulnerable road users, there's pedestrians, there's cyclists, motorbikes, etc. that are much get hit more often. versus living outside the cities, the frequency of those losses is significantly different.
And one final question. We haven't explored the issue about how much cost it is costing the consumer and you, the industry, of uninsured drivers who are deliberately uninsuring as opposed to those who we, Dane Siobhan was identifying as people trying to get insurance. Is there any sort of industry data on that? How much that is the cost?
I mean, in terms of the Motor Insurance Bureau would have some data, but just to give you some idea, we estimate there's about £1 billion worth of fraud that's undetected each year in the industry. There's £1 billion in claims that we detect, and then there's a further £1 billion that we would detect at the point of underwriting. So obviously that first $1 billion probably does find an insurance company that's willing to cover them. So it's a very material impact, about 4%, if I recall correctly, on the cost of insurance is directly related to fraud. So it's something we invest very heavily in. In terms of uninsured, purposely uninsured drivers, I personally don't know.
I think 4% is the uninsured drivers cost, and then the fraud one I think is it might be slightly higher.
One of the other areas where we've seen significant price increases over the last 5 years has obviously been building costs and building repairs.
Yeah, and the cost of flooding.
Of course, yeah. So when people come to take out buildings insurance, pardon?
And storms as well as
and
flooding.
storms, sorry. Yeah. When people come to take out buildings insurance, what advice are you giving them as to what they ought to be looking at in terms of if they insured on buildings from 100,000 last year, for instance, should they be looking at 110, 115, 125? Are you giving them advice? Because clearly you would have a better sight of all those risks in any one area and what would be an appropriate rebuild cost.
We automatically inflate where the cost of build is going up. We also, on our website, if you go on, refer everybody to the BCIS data, which allows them to do a very simple calculation. Again, at LV Allianz, we take a quite simplistic approach. The very minimum cover replacement is 500,000. Our Allianz Plus customers, which is the majority, it's unlimited, we replace it. And then our middle tier is 1 million. Now 500,000 is more than what is the stated cost to rebuild the property. The other thing, normally if somebody hasn't got sufficient cover to rebuild their property, and these are very rare occasions where you have to rebuild the property, unless we know they maliciously misrepresented the facts, we would just pay for the rebuild. So it's really not an issue in personal insurance more so than it is in commercial.
And you're obviously talking particularly for your company.
Right.
Mm-hmm. I'm assuming, Mrs. Clark, that would be we could take that as a general position across the industry?
Yeah, I would say it was pretty general in terms of, general inflation of rebuild costs. Coming back to the Consumer Duty, it would be strange for expect a customer to understand how the cost of rebuilding their house have changed year on year. You would think that was the responsibility of the insurer.
Yeah. Well, those two answers have taken away most of my other questions on this particular point.
Yeah, no, thank you very much, Stephen. And the bell still hasn't rung, and I know there are still some further questions, so we're going to keep going until the bell goes. There will be 4 votes when the bell goes, so we will end your session at that stage, suspend the committee, and then reconvene for the regulator. Siobhan.
Thank you. Mr. Holmes, I think this is a bit mean because you have at least agreed to come and speak to us, so I apologise for my question. Your website says you have done an extensive gap analysis of where you're not meeting the FCA's consumer duty. You noted some gaps in consumer support. Can you tell us a bit more about what your failings have been and how you're going to address them?
Yeah, as I said, we tested 3,000 different customer journeys, and obviously then focus on our most important ones from a customer perspective. The vast majority was around understanding of insurance and the clarity with which our communications with customers were just unclear to them. Their interpretation of what we were saying was different. So a lot of it has been about rewriting the language to simplify it so that it's clearly understood what's covered, what's not covered. There was never an issue for us in terms of being contactable, the example you mentioned. That is not something that any customer said they couldn't access us for contact. So it was predominantly around those communications and clarification of covers and fair value and the customer's rights, very clearly articulated within. So we changed sometimes how they would see the prioritisation, if you like, of how we communicate with them.
Anne-Marie.
Thank you. If I may, Mr. Holmes, can I press you a little further on some of the issues that have been raised with regard to insuring buildings? Mr. Hammond has raised some very important points. They all assume, and your answer assumes, that every insurance company will always ask the customer what the rebuild cost is. Now, I've come across companies which don't ask for any valuation of the property, don't ask for any rebuilding costs, even when that information is offered, don't ask for information about the age of the building or whether indeed it's listed, and yet offer insurance. Are they breaking the rules, and what happens with the consumer duty if the consumer has offered to provide that information? The insurance company says, we don't need it, you're covered. What happens if there's a claim?
So it could be quite similar to what Colm said of, the insurers just decided, right, they may have asked you, is the rebuild cost more than 500,000? And I'm going to guess, given the average house price, most people would answer, it's going to be less than that. So they may not have gone into the specifics.
No limits, no nothing. They do not want any information about.
They haven't asked for the value of the house in valuing the insurance of the house.
Nothing about rebuild costs.
Once they have your address, once we have somebody's name and address, we can pretty much find out most of the data that you actually need with regards to the property. So we would typically survey properties anyhow when you're writing home insurance to see what the positioning of trees are relative to the property, especially with regards to subsidence and matters to that also.
The customer not having to provide that information, they are covered by the consumer duty, and if there is an incident and they claim, they can rely on you having done that research.
The policy limits would be the policy limits. So the policy limits, for example, would have. I can't speak for other insurers.
I appreciate what astounds me is this particular company said there were no limits, which I find utterly extraordinary.
Most of our covers would be unlimited for property rebuild.
Thank you. I think as we bring this part of the session to a close, I know the ABI has put out a document recommending that the industry take certain steps in order to sort of reverse this increase that we've seen across the board, particularly with car insurance. I think there were 15 steps in your recommendations to bring down the cost of 10. Can you just update us, Charlotte, in the time until the bell goes on how you're seeing progress on those 10 recommendations?
So, they were published just over a month ago.
Yeah.
As I mentioned, Colm chairs a group across the ABI of the CEOs that have that run motor. On each of them, we're trying to kind of make progress. Some of them sit with us. Some of them, things like we could cut the rate of IPT, the amount of IPT, insurance premium tax. Sorry.
That is, don't worry.
The amount of insurance premium tax that has been paid.
Things over which you have no control of, there are things that you can control. So the things that you can control, how are you making progress?
So I think, specifically a lot of our focus has been on the fraud side and on the relationship that we have with police, of, whether or not there is more that we can do there to try and kind of clamp down.
Are you working with the Society of Motor Manufacturers on some of these issues around vehicles being easier to steal, or is it electric vehicles that are more expensive to replace? What are the big things you're working on, and are you working with the car industry on that?
I know a lot of the car industry are looking specifically, because I think where there has been focus on the cars that have been easier to steal, they have been investing, and rightly so, in terms of making them more secure and safer, so that the insurance on them is lower. So we have been kind of working with them in terms of, right, well, where are the problems? Colm mentioned Honda Jazz. So where there are specific things and we are collecting that kind of information of what are the problem areas, then it's kind of feeding that through.
Okay, so to go back to the 10 steps over which you do have control of, how much progress has been made?
In a month? I mean, I think, these are not straightforward things to do. They're about working in partnership, putting forward cases for things like graduated driving licenses, making the case for some of the things that are there. It is absolutely a priority, and I think both of us spent a fair amount of our time trying to address these things. Could I point to something and say we've done that this month? One of the things that we have been working on over this month has been a particular focus with regards to premium finance. So looking at principles for what should you be really looking at when you're looking at monthly payments? How can you explain to someone what you are charging them, and making sure that that is completely transparent and completely in line with the fair value rules of the FCA.
It's early days is really what you're saying. If I had to ask you whether you would be back here in another year to again explain exorbitant increases in premium, would you disagree with me on that?
I don't think that the costs coming through the industry, and you look at something like the EY study, there's no profitability in the industry, so costs will continue to increase. An industry cannot last if it is paying out more than it is taking in. So either there has to, we have to kind of tackle the costs of claims and whether or not there is more that can be done. If that can be done, then that gap kind of closes. If not, then premiums will have to continue to increase. I hope not at the rates that they have done. But I couldn't sit here and give you a cast iron guarantee that we won't see increases over the next year.
And then on this issue that was raised by the first panel around discrimination, it's illegal to discriminate between female drivers and male drivers, isn't it? But on any other protected characteristic, it is possible still to price differently, isn't it?
So it is illegal to directly discriminate.
Age? What about age? You spent the whole session telling us about how you discriminate on the basis of age.
Unless you can justify there's a reason for it. On the ethnic penalty area, we've kind of discussed some of the challenges of, again, it's risk pricing and postcode pricing, but similarly, on the age one, where...
You can't charge female drivers less, right? That's specifically excluded.
Yeah.
It was European law.
Yeah. But everything else, if you can make the case, you could discriminate on that basis. You could price differently on that basis.
You could indirect discriminate if you could justify.
Including age, yeah?
Yeah.
Yep.
Very much.
It's a valid risk.
It's like the biggest variable is in fact age. Is that?
Yeah, I think that...
It would be one of the...
Age and location.
Yeah, location and age.
Location, age, not distance driven.
Mileage would be critical. So, I mean, there's a number of factors. Mileage, age of the car, engine size are all critical. We typically don't ask health questions, but increasingly, the problem is that when somebody's in their 70s and 80s, you can have one person the exact same age who's incredibly able-bodied, great eyesight, great hearing, great awareness, and somebody else who has diminished eyesight, diminished hearing, diminished capability. Because you don't distinguish between the two, the average cost of the premium for both people will become higher.
Any other questions from colleagues? In that case, I think we're drawing this nicely to a close just in time for our vote break. And so I am going to suspend the committee for after this second session. I'm going to suspend it until after the votes, and they will probably take about 45 minutes, and then we will reconvene and speak to the regulator. Order.
The proceeding is currently suspended. 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 The proceeding is currently suspended.
Back to public sessions. We've done our voting and we can now start the third session of our inquiry into the insurance market. Could our witness introduce himself for the record, please?
Thank you. I'm Matt Brewis. I'm the Director of Insurance at the FCA.
Great. Well, thank you for bearing with us while we did our voting. And we have heard from our constituents' concerns. Have you been concerned as a regulator about the insurance sector?
Around the rising prices?
Have you been particularly concerned about what's happening in your sector recently?
Yeah, so many of the letters that you have received have also been passed on to me, and I've been had direct correspondence from consumers. And you know, some of them are really heart-wrenching stories of people making decisions as to whether or not they can continue in their current roles versus food on the table, and how they can kind of continue to support their families.
Does your data show that there's been a spike in problems in the insurance sector?
So there are various data sources. So it is clear that there has been a significant increase in pricing of motor and home insurance over the last 2 to 3 years. For a number of reasons, which I'm sure we can talk about. It is clear that there has been a rise in complaints, predominantly around motor and around home insurance, and around some of the value that people feel that they have not received from the products that they expected. And there is a general, there's an increased level of dissatisfaction with...
It's more than just a rise in complaints. It seems to be like a 50% rise in complaints from the Financial Ombudsman data.
Yeah, so the Financial Ombudsman said last quarter there were just over 4,000 complaints that they had received, with the majority of those relating to issues around motor insurance. And those ones were generally around the time it was taken for the fixes to be done to their vehicles, how much they were receiving in payouts when their cars had been written off, and also delays in poor customer service.
You think car insurance is a particular problem at the moment?
I think motor insurance is the one where we are seeing the greatest level of consumer complaints.
So what are you doing about it?
So there are a number of different pieces we've been looking at. So firstly, there is the inception, so there's the prices, and then at the back end there's the claims side of things as well. So when you take out the product and then when you need to use it. And I think those are the two areas where consumers are most focused when looking at their motor insurance products. In terms of price, we have been looking at the data that the ABI have produced, where we've seen the increase in costs that insurers have faced from supply chain issues, from rising cost and complexity of vehicles, and the rising number of claim instances that people have suffered. And that goes in the home sector as well, all of which show the effects of inflation in the wider economy and how they've impacted on the motor sector. And what we've also seen is that the insurance sector has not done a particularly good job of forecasting inflation and the impact it will have on their supply chains and protecting those parts of their business to a level at which we've seen them make significant losses, and in the way that the previous panel, Colm and Charlotte, spoke about how many firms and the market as a whole made underwriting losses last year, they're seeking to recoup those losses, but also ensure that they're pricing in future inflation as well. So we are seeing those costs.
What are you as a regulator doing about it? So you've looked at some data.
Yes.
Are you actually taking any steps to ensure that, for example, the consumer duty that you brought in is being applied properly in this sector?
Yeah, absolutely. So there are a number of areas where we focus. So first of all, it is a very competitive sector. There are over 48 last year. There were over 48 active insurers writing motor insurance, and what we see is innovations. I put in inverted commas in the market. So to give an example, there were a couple of insurers last year that input a new line in their terms and conditions that said, if you have an accident and don't tell us about it in the first 24 hours after it's happened, you'll have to pay an additional £500 excess. As soon as we became aware of that through customer complaints, we spoke to the two insurers we were aware of who did it and told them that had to stop. Because what we see in the motor market is, because of the levels of competition, if people get away with or make these changes and can see that other firms are getting away with it or able to improve their profitability or reduce their costs by doing things like that, we act quickly to stop that before it becomes a common trend across the market. So we have a market monitoring function that's looking at those changes. In terms of costs, we're assessing the fair value assessments, and we're meeting with price comparison websites, brokers and consumers through our consumer panel, one of the statutory bodies that the FCA has, to understand the concerns of consumers and where they are seeing issues. Through that, we're able to see examples like you gave earlier of your constituent of the significant rise that they were facing in their insurance premia. What we're seeing is for older customers, we're seeing a greater increase in the percentage charges.
How many times in the last 12 months then have you sort of made these interventions?
So there are different types of interventions, but so on an individual firm basis, actually my teams are doing those, I wouldn't say daily, but very frequently with individual firms where we see individual cases coming up. Cases like you mentioned where a customer, if we were aware of that case, I would expect a consumer to be able to pay over the telephone, for example, if they needed to, and we would intervene in that type of case. And we speak to the Ombudsman. Us and the Ombudsman work very closely to understand where these problems are bubbling and look to intervene swiftly.
How many industry-wide interventions have you taken in the last 12 months?
So industry-wide, we've had claims would be the main one that I would focus on. So we made a publication a few weeks ago around motor total loss, so where insurers were underpricing when customers received less than they should have done for their car being written off. We have undertaken reviews of a number of firms and are requiring repayments to be made to those customers, and we've set out very clearly what our expectations are of all insurers in the future under the consumer duty.
So that's the one intervention, is it?
That's one.
One.
Another one is around a product called gap insurance. So to use it's still around motor, but it's not motor insurance. This is where when you buy a new vehicle, or sometimes a second-hand vehicle, if you take out finance on that and your car was to be written off, there can be a gap between the level at which your payout is from the insurer for the value of the car and how much of the finance cost. And a policy called gap insurance is often sold by garages that pays the difference, the gap between those two. Our value measures, the data we receive on this, found that for every £1 that insurers took in premium, 70p of that, 70%, 70p, was used to pay commission to the garages, and only 7p of that was used to pay claims. We regard that as a poor product. We reviewed the fair value assessments done by firms and found them wanting, and intervened with those insurers to stop them selling that product until it could be amended and to provide fair value to customers. And I would expect us to be doing a number more of those more market-wide interventions around those types of products over the coming year. Pardon me, you asked for market-wide ones.
Yes.
In terms of individual.
You've done 2 market-wide ones. Brilliant. Stephen.
Can I pick up on a number of points? Going back to the consumer duty, I accept that it's early, but can you give us a view from the FCA about how you see it working at the moment, where you see you may need to put more pressure on to make it work more effectively than it is currently?
Yeah. We're seeing firms make good efforts to implement the consumer duty, and our CEO, Nikhil Rathi, has given a speech around exactly this issue, and where we've seen good practice of firms making changes around all kinds of areas across financial services, around advice, charges, and other actions. In the insurance sector, Colm earlier spoke about some of the changes Allianz have made, and they were not dissimilar to what we've seen. We've seen a great focus of firms on customer understanding, simplifying what their policy wordings are. Areas where I think they can do more, I think there's a lot of learnings of where something goes wrong. Taking the earlier example, for example, how do they feed that back into their systems to make sure it doesn't happen again? How do they understand the root causes of their complaints? And one of the feedback loop, as it were, is an area where we're seeing it developing, but I think there's significantly more for firms to do to really embed that kind of continuous learning. But I think that will come over time. But overall, we're seeing good progress. It's going to be an ever-raising bar as the duty gets embedded, as lessons are learned, as we publish good and poor practice and where we want firms to concentrate. But I think that would be the main area for now.
You think you've been explicit enough with firms in actually defining what in good faith and avoid causing foreseeable harm has been? Do you think there's any discrepancy amongst understanding of the industry about what those phrases mean?
I think those are generally quite well understood terms, and I think one of the things that we are doing in insurance, but also across the board, is publishing, as I say, these good and poor practice guides where we're seeing progress being made, where things that we like, things that we don't, which help the industry understand where that bar is. It kind of colours in the grey area. So there's the bits that are black, the bits that are white, and in the grey area there in the middle, it kind of gives that greater clarity that reduces those areas of concern.
So you think that
I think there's more for us to do.
There is more. Fine, thank you. And obviously, we heard Mr. Holmes say that he didn't think that it would put necessarily a cost increase for the industry. I mean, I have spoken to others who think that it has put a cost burden. Have you had representations back about the level of extra cost burden as a result of the consumer duty or not?
So as Mr. Holmes, as Colm said, there's been a number of pieces of changes to regulation over the years. In the general insurance pricing practices rules that were introduced a couple of years prior was, I think, introduced many of the rules of the consumer duty and did come at a cost. Look, of course, the consumer duty has cost money to firms to implement. I mean, we regard the inability for this to be a competitive advantage, firms to win business by offering and selling products that customers want and gaining greater market share, and it being a good thing for good businesses in order to be more profitable, which is obviously, we do want firms to be profitable, and that's I think that's definitely possible. In terms of your direct question on representations. I think another part of my role is the life insurance sector, which has had less new regulation in recent years around this, and they do have a bigger lift. And as Ms. Clark spoke about, those firms have some very old long-term saving products which are requiring a greater level of work, and it is costing more. And whilst I haven't received direct representations, a number of CEOs have spoken at their results about the cost of implementing the consumer duty, primarily because of some of the legacy products that they have on their books from old acquisitions.
Thank you. Can I just ask you a couple more questions then? In terms of, the Chair obviously spoke about the 50% increase in complaints that the Financial Ombudsman has received, and we talk about being about 4,000. That sort of means if you look at the products that are most complained about in financial services at the moment, 2 of the top 5 are insurance products. Do you think that you have the right resources to look at the regulation and the resolution of those complaints inside the FCA?
So, yes, I believe we do. We work, as I mentioned before, we work closely with the Ombudsman to understand what those trends are, where it is that we're seeing those issues that are increasing, so that we can do more work on those specific areas. And one of the interesting, problematic areas, I think, when it comes to mandatory insurance, like home and motor, is for many it's something they're buying because there is a legal requirement to. It's a grudge purchase, and people are either because of their ability to pay or willingness to pay, or want to pay as little as possible for those products. And the majority of product, 58% of home and motor new customers, are buying them from price comparison websites, which provide a really helpful service of ranking products, so you can go to one place and see what how cheap you can get the product. What it doesn't do, however, is tell you a huge amount about the service, about the value, about what customer service is like at that firm, how quickly they'll be able to deal with your product, any claim that you have, what their processes are, how long the average length of time is in order to resolve it. All of those things that actually people are complaining about. So at the outset, people care about price. When they need to use the product, they care about the value. And insurers are trying to be at the top of price comparison websites because that's where they get the business, where people want to. Consumer research shows most people are buying from the top 5 or 6, either the very top one, if they're the least priced elastic, most priced inelastic purchasers, or the first name that they've heard of as they go down the price comparison website page, where they have a good view of them. And what that leads to is what's known as hollowing out of products, the removal of phone numbers to call if you have a concern, new for old and other things that might have been more traditional in products in previous years, courtesy cars, etc., being taken off of products, windscreen cover, all of which lead to a cheaper product, which ticks one box of customers, but not the one when it comes to value. And that's the area where we have actually it's quite a conundrum for us as a regulator and the market and users.
So isn't the problem, when we heard from the consumer panellists at the beginning, they were talking about what they viewed as the lack of transparency in the industry, and clearly there are these sites. But the reality quite often is that I'm sitting here with my current policy, and I go to the website and it says go to site 1.
Yeah.
You have to do quite a lot of work to ensure that what you're being offered there, even if you put in broad parameters, is what you're being offered or what you have already, isn't it? And so one of the issues particularly for, shall we say, a number of people who are perhaps not as computer literate or other literate, is actually it is quite difficult to work out what you're getting A versus A or A versus B or whatever in terms of, and that transparency is still difficult to achieve.
I think that transparency is difficult to achieve, and I think it's a challenge that we are putting to those websites and to insurers to make it really clear. Some of them, they call themselves essentials brands. They believe there's kind of clarity around, consumers know what it means to buy an essentials product versus one that's called gold or something like that. So there is a focus on naming around that, but actually what constitutes the product and how you compare product A and product B. There is a challenge for the that we are putting to the sector.
I can go on, but let others have a go.
Okay, I'll bring in Siobhan then, and we'll see how we're doing for time. Yeah.
Thank you for raising the issue, my constituents' issue, which was all about her attempting to renew her car insurance with the same company, only to find that she could pay by phone last year, but couldn't pay by phone this year. So can you require eSure to allow current customers to still be able to pay by their historic payment method? Can you intervene with eSure on the car insurance industry as a whole? Can you stop that discrimination of probably older people who don't have access to the internet?
So, look, I can't talk about individual firms and I don't have all of the detail of the case. So let me put those caveats in before we start. We have expectations around how people treat vulnerable consumers. And you mentioned earlier your constituent's husband who had dementia and wasn't computer literate, and potential signs of what you'd expect a firm to class as a vulnerability in terms of their policy, and where you'd expect them to have routes to assist them in order to deal with their product that they have with the firm. I would advise your constituent to go to the Financial Ombudsman with that issue, or to make a complaint and go to the Financial Ombudsman in the first instance. I would expect any firm, when it comes to vulnerability rules, however, to have clear plans, policies in place for how to deal with issues such as the one you mentioned around consumers unable to pay via certain channels.
Can I just say, Ms. Brewis, this is a bit of the same problem as the idea of informed consumer. Some people have so much going on in their lives that they can't spend all this time complaining to the Ombudsman or doing their price comparison. This was a lady who simply wanted to be able to continue her car insurance with a company that she had been to. She cares for a husband with dementia. Is it reasonable to expect that she should have to go through making a complaint?
If she is unhappy with the service she's getting, it should be really simple. When we talk about these things, they become sludge practices, areas where firms make it difficult for you to cancel your policy, or you can buy it with something with one click, but you have to phone up and hang on the phone for an hour in order to cancel it and things like that. Actually, in insurance, we require firms to be able, if you can buy it online, you need to be able to cancel it online. And I think it's actually one of the things that I'm happiest about as a consumer, that we have that requirement in place. In the situation you talk about there, it should be as simple, in my view, of a customer saying, I am unhappy with how I'm being treated, please treat this as a complaint. It needs to be easy for customers to raise their concerns with firms, and firms need to then, they have the time period to deal with it. Now, in the scenario you talk about, actually, you would hope there would be an easy resolution and they'd be able to make the payment on the phone. But the Ombudsman is there as free and easy to use for consumers where they have difficulties in doing so. I take your point. It would be a frustration. It would be time consuming in a time when somebody hasn't got time. But I'm afraid I don't have a solution to do it quicker.
So the FCA can't say that people who don't have access to the internet shouldn't be discriminated against.
Well, your concern was around how the payment was being made. Now, some insurers will offer a product, and indeed some online banks will offer a product, for example, where you get a better interest rate because it is online only, because there is reduced staff costs. You don't need to have a call centre in order to monitor it. There are where there are reduced costs of providing a product.
My point is, in this particular case, she wasn't asking for new or different, she was asking for the same.
Understand.
And if we look at the whole issue of paying interest if you want to pay monthly, we know that in 2021 the FCA banned a practice called price walking, where loyal customers were made to pay more for the same insurance, which have told us that insurance companies could get away with it because their loyal customers wouldn't notice the price difference. It has led 6 million people paying 50% more in fees, and have they? Who has been the worst offender to date, and have they improved their game after the ban came into effect?
And a loyalty penalty, sure. So our rules that came in early 2022, effectively what they require is whether a new customer or you're a renewing customer, you are offered the same price for your product. We see firms complying with those rules. Occasionally, there are mistakes that firms have made, and we have, in at least one case, we have made that public. But there are firms who have made, I believe, honest mistakes, who have subsequently rectified it. They've made, sent out checks to those customers who they've charged too much for. We are currently undertaking a review of the impact of our insurance pricing, the loyalty penalty ban, which we'll be publishing towards the end of this year, early next year, that will kind of cover how it's been implemented and its effectiveness. So, but overall, as I sit here today, I'm not aware of there being significant breaches of the rules.
And if we turn to instalment payments that you said was a tax on the poor, which have revealed that Central Insurance charged customers 39.11% interest on their loans. They quoted one customer an extra £504 just for choosing to pay monthly. Only the NFU Mutual and Hiscox said they do not charge interest on monthly repayments. Is this something you're going to review? Would you include fair interest rates as part of the consumer duty?
So I think this is a product that I care a lot about, and I am very concerned about the impact, the additional cost it can have on consumers. And it's an essential product for those consumers who can't afford to pay in one lump. And actually, even as 50% of people in the UK for their motor insurance, it's roughly 50, it's about 51, 52, pay monthly. On the home insurance, that number goes up to about 60%. So it's actually a large swathe of the population. It's not just those on the lowest incomes who use it. So my concern is around the credit risk that is charged. There's very limited credit risk when it comes to these kind of products. If you don't pay for your insurance, it can be cancelled. And so the cost of it is being used, in my opinion, to kind of reduce other costs in the insurance chain. We're considering, we will consider our the which data is information that we're aware of, but one of the areas we're concerned about, and it's linked to what your first question or your previous question around the loyalty penalty, is something called the waterbed effect. So because the insurers are not making significant profits, if we reduce their income from this type of charging, it will come in somewhere else. And it won't be a case of we remove premium finance as a cost, and then insurers will just eat that cost. It will appear somewhere else as an increased cost. And so, and one of the things that's really important, I think, is we understand the implications of any action that we take around it. So we were asking firms, they've all created fair value assessments and adjust, their role under the consumer duty is to show that they are providing fair value to their customers. And for all of these products, every firm that offers premium finance will be producing these fair value assessments to set out why they believe it is so. And it is one of those areas we'll be looking at. We have seen, generally across the market, the rate charged come down, some, not a huge amount, but generally the average is ticking down. But I think this is an area where, with the loyalty penalty, there was a first mover disadvantage. If one firm reduced their prices for existing customers significantly, they would have had to raise their new customer price. It would have made them uncompetitive. Actually, I don't really see that as such a big issue in this market. And so, and as you said, you named two firms there who are not charging for premium finance. So it is possible for firms to charge less or not at all. We see distinctions between the home market, where there are more firms not charging than we do in motor. We are looking at it. We will continue to, and we will continue to push and encourage firms to take action themselves.
Thank you very much, Siobhan. Angela.
Thanks. Just want to ask a few questions around different sorts of insurance. Given that car insurance is a mandated product and that car owners have to purchase it to be legally on the road, should there be greater scrutiny of insurers' profit margins and absolute amounts of profit on a car insurance product?
So the FCA isn't a price regulator in that way, in terms of our objectives, and so therefore it doesn't, as it stands, come under our remit in order to do that. And any debate around that would be, one of social policy, I think.
What you mean? You're not interested in profit margins?
Yes, but the capping, understanding what they are and how firms are making them, but the
it's a greater scrutiny of insurers' profit margins and absolute amounts of profit on car insurance products. Surely, as a regulator, you'd be interested in looking at that for any product to see whether it was being done fairly.
Apologies, I misheard. In terms of greater scrutiny, absolutely, it is an area that we do look at, and we do consider how much firms are making, along with our colleagues at the PRA as well, who have to consider the solvency of firms. We work very closely with them around understanding business models, profit margins, and as part of fair value assessments, the price is a key aspect of that. But we will. It is an area that we scrutinise, yeah.
And what's been going on in the last period? Because the cost of what is a compulsory insurance has been soaring. So what's been going on with profit margins, and are you worried about it?
From an underwriting perspective, as Colm and Charlotte said in the panel before, independent analysis has shown that firms have not been making an underwriting profit on selling insurance, and where they have been making profits has been add-ons and other products sold alongside. And so a focus of our work has been on those add-ons, things like premium finance, for example, which we regard as an add-on to the motor finance, have been the areas where we have been increasing our scrutiny.
So your analysis shows that car insurance, which is compulsory, is not profitable unless you put add-ons onto the premiums. Is that what you're saying?
Yes.
And so
So if I may just explain a bit more, because I can understand your concern.
I have to say that the people that talk to me about their car insurance and their soaring levels of car insurance would take what you're saying with some surprise.
Yes.
That there's no profitability at all.
So we've seen significant increases in claims across many insurance products, not just home, but home and motor. But there has been a significant increase in the number of claims, and we publish data called our value measures data, which shows the amount taken in premium, the amount paid out in claims, and actually motor is the highest when it comes to is in the mid 60s percent of premiums taken is used to pay claims. Some of those, what's happened is supply chain difficulties, delays in fixing cars due to lack of labour, higher demand globally post the pandemic for new vehicles, the kind of model of and this isn't a point about electric cars specifically, but cars more generally are becoming more sophisticated, and what would have been a little tap on the bumper that could have been solved by a trip to the scrapyard 20 years ago requires a few £1,000s of replacement of cameras and other sensors in a bumper to replace it now.
Well, no, there's plenty of older cars than that on the market, I suspect. But I mean, the issue here, though, is the more that the price of car insurance goes up, the more you are likely to have uninsured drivers on the roads. I mean, we know it's a criminal offence and all of that. But there's an opportunity. Well, there's a cost to having an increase in uninsured drivers on the roads as well.
Yes.
How do you take account of that in your analysis of whether insurers are being fair to all customers? Because if you're hit by an uninsured driver, it's pretty dismal.
There are a number of insurers who have pledges around that. It's not consistent across the market, but there are a number of insurers who have pledges to not increase your premium in the event that were to happen. But as you say, it is a criminal offence.
So you don't consider how much price mitigates access to something like a car when Parliament has legislated to make it compulsory, understandably, to have car insurance, and yet increasing numbers of people can't afford car insurance because the prices of it are going up.
As it stands, so yes, you're right. Look, but as it stands, it is not a defined right by Parliament as part of government social policy that there is a entitlement to access to a vehicle, and therefore it's regulated on a kind of different basis.
Why are you so worried about straying into what you keep referring to as social policy? You seem to be very, very jumpy about it.
Yeah. Well,
explain what that's
well,
all
in
about.
terms of those matters that are ones for the government and for the Treasury to make decisions on versus the regulation of the market and how products are sold, where it comes to where everyone else something is deserving of a social tariff or something like that, or that kind of regulation is one for government rather than the regulator.
Can you just very briefly, and I suppose declare an interest as someone who lives in a multi-occupancy building, say something about the efforts you're making to resolve the commission issue, which you highlighted last year, and how you're getting on with that. It emerged that the huge increases in buildings insurance for those who live in multi-occupancy buildings were made up of large amounts of undeclared commission over many years. So how are you working to resolve that unfairness, as often people in multi-occupancy buildings can be people on very fixed incomes, like pensioners in social housing or sheltered housing.
No, absolutely. And I gave evidence to this committee last year around that, and to the leasehold reform bill committee a few weeks ago on the progress that we've made around that. I think there are a number of areas that we can talk about there where we've made significant progress has been made. So our new rules came into force at the end of last year that require leaseholders to be treated as customers. So just to take a step back, what was happening was leaseholders were paying the bill but were not customers and had no rights. And what we were seeing was the leaseholder were not being taken into account by the insurer, by the freeholder, or any part of the chain. So our rules require that insurers and brokers treat leaseholders as part of the insurance chain, and consider their needs under the, and as a customer. We still don't regulate they're not financial companies, but they're the managing agents of those buildings. The legislation that's currently going through would seek to ban the payment of commissions, and so we've stopped regulated firms making those payments to an extent. This bill will make even more stricter changes to that. And I think the most significant recent development around that has been the ABI has implemented one of the recommendations we made in our 2022 report for the worst impacted fire safety buildings to have a system in place for the pooling of the risk around that, reinsurance around it, to reduce the cost of that insurance. And that went live, or is shortly about to go live, which will have I believe, based on our analysis, a significant reduction for those worst impacted buildings. And with that should also come a reduction in brokerage, because you have a one-stop shop for those buildings to be dealt with. I welcome that BIBA, the Brokers Trade Association, along with a number of its members, have introduced a cap on commission. I think there's still more to do around that. I think there's...
Which we hope this legislation will achieve if it ever gets on the statute book.
It will have some impact, but it won't impact the level of direct brokerage that's charged and commission that's charged. And I think there is more that firms can do to support leaseholders around that. And we're working closely with BIBA and the ABI around those issues.
Thank you very much. And I think you used a very useful analogy earlier on, which was the waterbed.
Yes.
And I just wanted to clarify, with the loyalty penalty and the rule change that you made at the beginning of 22,
yes,
which effectively said that you can't charge new customers less than you're charging your loyal renewers,
yes,
presumably that led to a waterbed effect in that everyone paid higher premium.
No, not at all, actually. I think there was if you imagine a seesaw, so you had some customers who have been with
seesaw on a waterbed, I'm having trouble.
Sorry.
Yes, I know.
Let me try again. New customers were paying below their risk price. So if you assume your price should be 100, as a new customer, an insurer was charging you 75,
yeah,
for example, to get you in. They were at a discount. For somebody that we saw some examples of people being charged 8 times their risk price, i.e. 800 for their insurance, because they were cross-subsidising those people who were paying below their risk price. So what happened was, as when our rules came in, those who were paying so much more, their prices came down significantly.
Surely that meant, with your waterbed analogy, that someone else's prices...
The new customer, those people who shopped around every year, and those who were new customers paid more, yes.
So that would be one of the reasons why premium in this area have gone up so much then?
It would be why, for those people who switch every year, and why data from it's kind of, if you look at time, and I think it might explain some of the confusion, I think, around the ABI data and your data around loyal customers versus new customers, for what's happened with prices over the last 5 years or so.
Okay. And then my last question is, have you fined any insurance companies in the last 12 months, and if so, what for?
Insurance companies, I may have to write to you on that. We have one broker around some issues. We have required things like past business reviews to be carried out, which are not fines per se, but are fixing problems from the past. But for insurers and enforcement outcomes that have resulted in fines, no.
Unless my colleagues have any further questions on insurance, we want to thank you for staying to do this delayed session. I'm going to declare it over. Order.
The proceeding has ended. 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 The proceeding has ended.